Hello, I'm Michelle Cole, loan officer with Golden Equity Mortgage, a division of Land Home Financial Services. And I am really excited to be able to share with you today an amazing financial tool that will help you sell more homes. So stay tuned to the presentation, and afterwards, if there's any questions, then let's get in touch. Thank you again for watching. Thank you for joining me to learn how to sell more homes with an equity conversion mortgage. I'm Michelle Cole, and you're about to learn how an equity conversion mortgage can help you sell more homes. You'll learn how to provide older Americans with the opportunity to maintain the lifestyle of their choice. I'd like to give you a simplified definition and some goals today. The equity conversion mortgage is also known as a home equity conversion mortgage, or HECM, and a reverse mortgage. But as we all know, the reverse mortgage is kind of fraught with a lot of misunderstanding, miscommunication, confusion in the industry. So let's simplify that today. A home equity conversion mortgage, or equity conversion mortgage, simply converts home equity into usable cash. Some industry goals. In order to project the image that we really want people to understand what it is and why it benefits them, we want to change the perception that rather it being a loan of last resort, it's a tremendous financial tool. It's similar to any other traditional mortgage, and it also frees up assets during retirement years so that an individual can maintain the lifestyle that they've been more accustomed to throughout their life. For you, importantly, today, as a real estate and professional, you'll learn how to sell more homes to that ever-expanding population of older Americans. That it's similar to any other purchase transaction, but you get twice the home as your client could otherwise buy if they were just using all cash. And often, as an agent, you're going to realize that you get both the listing and the sale. A twofer, if you will. So how it works in a purchase transaction. The youngest borrower must be at least 62, and it must be for a primary residence only. Property types: single family, FHA approved condo, 2 to 4 units, and some manufactured homes. The mortgage loan amount, though, is determined by the appraised value, or FHA limit, whichever is less, the borrower's age, and the interest rate. The rest is cash to the new loan plus the closing costs. The cash can come from sale proceeds, gift funds, savings, or other eligible sources. The difference here is that there are no seller concessions, broker, or lender credits allowed. Let's have some understanding here to simplify again. Understanding mortgage loans. We have traditional mortgage that you're used to, of course. The income is used to pay the monthly principal and interest and eventually pays off the loan. However, in an equity conversion mortgage, the borrower's initial equity is the amount of cash in the new loan, which is pretty similar to a traditional mortgage, of course. But the difference here, eventually it's the equity that will be converted into cash to pay off the principal balance on the loan, plus accumulated interest and the mortgage insurance at some future date. Now, the benefit to the borrowers: there are no monthly mortgage payments. They may be able to keep more cash in their pocket than if they were using an all-cash transaction, and we've got some great examples here. It frees up income to maintain their lifestyle, and the loan balance is not due until the last borrower on title permanently moves out. Or there's a repayment event which occurs, and that can be if they don't pay their property taxes, homeowner's insurance, or fail to maintain the property the lender could call the loan due. Why choose an equity conversion mortgage to buy a home? The client gets twice the value for half the cash. There's no income qualifying presently or credit qualifying. It is a non-recourse loan. So that means when it's time to pay back the loan, if for any reason the loan balance exceeds the property value, which could be a drop in the market or some other circumstances, neither the borrower or the heirs is liable for any excess. What happens is the FHA mortgage insurance would pay the lender the difference between the loan balance and the current appraised value of the property. But in most cases, the loan balance is paid off like any other loan. The borrower or heirs then receives the cash proceeds from the sale of the home. Let's look at the purchasing power of these loans. Here's an example of using all the proceeds from the sale of a home. You've listed the property and you sold it. The client, he's 70 years old. He received $143,000 cash proceeds, and now you're about to find him a home that better fits his lifestyle. And here's a couple of options he may want to consider: a $143,000 home or a $300,000 home. Now, interestingly, he can buy either one. Let's look at how. Either he could pay all cash for the one on the left here, or he could buy the $300,000 home using his cash plus an equity conversion mortgage. Both of these options have no mortgage payments, but which one is he going to prefer? Here's another great example of keeping some cash back. Now, you may have a client who sold his home, say for $500,000. It was free and clear. His net is $460,000, but he doesn't want to have mortgage payments in the future, but he'd also like to keep some cash. So he decides to buy a $350,000 home. So let's compare both an all-cash transaction or using an equity conversion mortgage. Here's some numbers for you. The cash, $460,000 is his proceeds, less the value of the home, $350,000. He's got $110,000 left. Now that's great, but look what happens here with an equity conversion mortgage. That $460,000 proceeds, less the $197,000 equity conversion mortgage, the cash from the borrower, $166,853. Look how much he's got left over, $293,000. Now, which one is he going to prefer out of these comparisons? Here are some real-life examples for you. Person's lifestyle is changing. Here's a couple. They're retired, but they have a good monthly income. However, they have a large home that really is no longer fitting their desire to have a more stress-free lifestyle. The situation was that they had no equity left in this home, and their retirement savings was not going to be enough to buy a small home and pay all cash. So the solution, the equity conversion mortgage, came in here, and it allowed them to use a smaller portion of their retirement funds to buy the home they really wanted. And it's in a retirement community on a golf course, and of course that's where they're spending their time. Here's a client that's nearing retirement. She's a single woman, professional, in her 60s, and her income has dropped. She's been cutting back, and she's at the same time rapidly depleting her portfolio. So she sold her large home. She netted just over $600,000. Now she could only afford, though, to take $300,000 of that to put in the next home, and the rest of it had to go into replenishing her portfolio. Now, she could pay all cash for a $300,000 home, but it wasn't going to buy the home that she desired in her preferred location. So what she did, she took the equity conversion mortgage plus the $300,000 cash, and she bought the downtown condo that she really wanted, and the rest of it replenished her savings and retirement accounts. Helping renters become owners. Now, you may have some renters. This particular couple would like to buy their first home after 28 years of renting. The husband's retired, and the wife would very much like to retire, but they can't do that with mortgage payments. They've saved $200,000 cash, and but based on the wife's income, they'd only be able to buy a rather small home. So the solution here, they could buy a beautiful home at $475,000 and not even have to use all their savings. Now you may have some investors and also somebody who'd like to time the market. So let's take a look at what can happen here with an equity conversion mortgage. You may be working with investors, and here's a situation. Here's an investor, and he's owned his home nearly free and clear. But he's always struggled to find and qualify for financing for his investment properties. You may identify this with this because you have investors who have this same kind of situation. And he buys the homes through his LLC, he rehabs them, and then flips them. Now, what he did that is really working tremendously in this situation is he paid off his existing mortgage on his primary home with an equity conversion mortgage, which he now uses as a line of credit to acquire investment properties. That $320,000 line of credit on his personal home, he's able to use to buy and rehab other property. And even though that there's no payments required, when he turns around and sells the property, he can turn around and replenish that line of credit so it's available to be used over and over again. And eventually, of course, when he decides to sell or move out of his primary residence, then that equity conversion mortgage would be paid off at that time. But this is allowing him to buy investment properties right now using the proceeds from that equity conversion mortgage. Now here's a way to time the market. There's a single woman here. She's got a large home in Del Mar. Now she makes good income, but in 2 or 3 years she's planning on downsizing. But she really doesn't want to sell if the market's down. And at the same time, she doesn't want to buy the next home when the market is really inflated. So her current home here, large home, pool and spa, it's great for her current lifestyle. And the equity conversion mortgage will keep her options open. So what she did was she took out an equity conversion mortgage on her primary home, and she bought her next future home at a hugely discounted price. She's got renters in there until the time's right for her to sell, and then she can make the transition. In summary, the transactions are very similar to a standard purchase. It takes no additional time or resources on your part. We have convenient processing and paper support. I've got a dynamic team at Golden Equity Mortgage, and they're very accustomed to handling reverse mortgages. The support that you and your clients received, I know you're going to appreciate. We provide ongoing updates, and I give your client personal attention, as well as keeping you, the agent, in the loop at all times. My job is to support you. And the added plus is you're going to have a lot happier clients. The reason is they've got no monthly mortgage payments facing them in 30 days. And also they may have a cash flow that they've never had before. I'm so pleased that you joined us today, and I want to thank you for watching my presentation and learning how to sell more homes with an equity conversion mortgage. I'm of course delighted to answer your questions, and if you have a specific transaction that you'd like to discuss, please give me a call. My office number here, 858-256-7119, or my cell phone at just about any time, 858-344-5998. I look forward to talking with you real soon. Thank you again.